I'm Sean Reynolds, the owner of Summit Properties Northwest and Reynolds and Klein Appraisal. And today I have with me Mr. Dan Chapman from Fairway Independent Mortgage. And we are talking about, Dan's a lender, he's a mortgage broker, and we are talking about conventional lending versus FHA lending.
Right.
And so Dan, what we often hear is, well, I'm approved for both an FHA loan and a conventional loan. Which one is best? So I was hoping you'd kind of run through what the differences are.
So the differences are if you've got, ideally you want to be in a conventional loan, not an FHA loan. If you don't qualify for conventional, that's the next best loan if you're not a veteran, is the FHA loan. And if you're under a 680 credit score, conventional is going to be, if you do qualify, it's going to be pretty expensive. The rate's going to be higher. If there's private mortgage insurance, it's going to be pretty high. FHA is a more expensive loan, but not if your credit score is, say, 620, 640, 660, somewhere in that range there. The rate's going to be really good on FHA. I just closed one this month. It was, 630 range credit score, and the rate was much better than the conventional rate. You will have upfront private mortgage insurance on the FHA. So there's an upfront fee. It's roughly 1.75% of the loan amount that gets financed into the loan, FHA. And then there is a little more, there's a monthly mortgage insurance premium as well. Whereas conventional, you don't have that upfront. But ideally, if you're conventional, if you can get conventional and you're at least 680, that's the way to go.
So for our viewers that don't know the specifics, everybody's probably heard the term conventional and the term FHA. Tell us, what does conventional mean?
Conventional loan you meet the basic guidelines for Fannie Mae and Freddie Mac underwriting rules. So your loan is going to be sold.
And who is Fannie Mae and who is Freddie Mac?
They're the biggest purchasers of mortgages in the nation. They're two large entities, and they have underwriting guidelines that if you conform to their underwriting guidelines, then they're going to buy that loan, and that's the loan that's a conventional loan. Essentially, if you're FHA, it's a government loan. It's different underwriting, a government insured.
And it's insured versus VA, which is guaranteed.
Yeah, two different things. VA is a guarantee. FHA is a government insurance. So if you default on your loan, the government's going to get back a portion of that. They're not getting, they're not getting back the whole thing. So.
Right. Yeah, they've basically taken it out, or it's included within the loan is an insurance. Policy.
Yeah, and that's why you pay that heftier mortgage insurance, so to speak, through FHA.
Right.
That upfront premium is 1.75. The monthly payment is, your monthly payment, if you have, say, a 620 to 640 credit score on the private mortgage insurance it's FHA mortgage insurance, is not that expensive compared to if you were going conventional and you had, say, that 640 credit score. It'd be really expensive. So for the borrowers, bottom line is if you're a borrower and your credit scores are under 680 and you have 3.5% to put down FHA versus conventional 3%. Those are the two most popular programs, and you're going to want to be.
And you're talking minimum down payment.
Minimum down payment.
Because if you're comparing conventional to FHA, you're probably concerned about down payment.
Yeah, typically down payment is a concern. There's not much difference between 3.5% and 3%, obviously. But there is a big difference in the payment depending on your credit score between the two. If somebody comes to me and they have a 700 credit score, FHA loan is not going to be the loan I'm going to put them in.
Right, because you can get them a better loan. Conventional.
Exactly.
Yep, okay.
Yeah, so that's important.
So if your credit score is here, you probably go with conventional. If it's lower, probably FHA.
Correct.
Depending on, you take a look at the package and you as a mortgage broker kind of figure out the best program for them.
Yep, exactly.
Tell us a little bit about interest rate. Is there a difference in interest rate?
Yeah, there is. There is. I mean, you can be FHA. If sometimes can be better. It's not always better. It just depends on their credit score. If you're FHA and you've got a credit score over 640, your rate's a little bit better than it would be if it was a conventional loan. But if you're over 680, your rate on a conventional loan will probably be better than it would be FHA. So it just depends.
Okay, it depends.
But definitely for those borrowers under 680 credit score, the rate will be better FHA. than conventional by at least a quarter point, maybe half a point. Depends on the market.
And if you have a good loan officer, like Dan Chapman. They'll explain it to you
Yeah.
in terms that make the best sense for you depending on the program and
Yeah.
the home you're buying
Yeah.
and all of that.
Yeah, if you qualify for both, and I tell you, hey, do you want to pay 1.75 extra % on your loan? No, they don't. They would like to not pay that, and so you know,
Less
go
is
conventional.
better.
Yeah, pay less,
Yeah.
save money. So
Another big consideration that real estate brokers have is that, okay, if the buyers come in with an FHA, is that it's going to have
Right.
more work orders on the appraisal end.
Yeah.
And so as an appraiser, I kind of can talk a little bit about
Absolutely.
that. But what's your experience been, say, over the last few years, conventional versus FHA?
yeah,
as
I mean,
far
if
as
the property's
appraisal?
an older property, like you've seen, you know, many times, Sean, where you go out there and it needs siding, new siding, or if it's got lead paint anywhere that might be exposed, or there's paint chipping somewhere, that's going to be called out, right? So that's going to need to be fixed.
On an FHA.
On an FHA, yeah.
Yep.
Whereas conventional, it's very, very lenient on what will be called out. I mean, really, the only thing I see called out for the most part conventional, maybe you would speak to this better than me, but the only thing I've seen called out is like there's a problem with the deck, a safety issue, you know.
Maybe a roof is coming off,
Yeah.
broken window, something kind of major,
Yeah.
missing floors.
Yeah, something that doesn't
missing
make it so
drywall.
livable or
Right.
safe is conventional.
Right.
FHA, you can see quite a bit, you know, get called out.
Right.
They're going to be stricter. So people that are making an offer, if you're a listing agent, they're going to look at that closer. If they get an offer that's conventional versus FHA, you know, I just did one and they lost out on their first one, so it was a real quick pre-approval and they made an offer like the next day. So I said, why don't we get your loan approved, FHA? So we actually submitted it for an approval, and they got their loan approved on a conditional approval and submitted it, and their offer was accepted because, you know, it was in that $500,000 price range in South Seattle, West Seattle area. So, you know, it's pretty popular price range in that area. So you want to try to get that because FHA can be tougher to get your offer accepted sometimes.
Right, right. And then with FHA, there's a different approval process for like condominiums.
Yeah.
So like projects have to be
Good point.
approved.
Yeah, the whole
in
project has to be
general.
FHA approved.
Right.
If it's not FHA approved already, which we can go to a website and find out within a couple minutes, then that's quite a different process. It can be very difficult to get it FHA approved and time consuming.
Right. And if it's not FHA approved, it might not be eligible for FHA financing.
Right, exactly.
So you got to kind of figure out all those factors. And as a real estate broker, you kind of have to know what you're putting your buyers into, and also have a little bit of a handle on if the mortgage person is sending your borrowers down the right road as well.
Right, right.
So, okay, well, Dan, thanks so much for sharing with us a little, and we have a little bit better understanding of kind of the broad strokes of conventional versus FHA. But the bottom line is you need to look at every borrower and every property and every loan that you're putting together on an individual basis, make a judgment call, and then recommend to borrowers or buyers,
Yep.
hey, this is the route you need to go.
Exactly.
Yep. Okay. Well, thank you so much for watching. Dan, thanks so much for being here.
Thanks
I
for
appreciate
having me.
your information. We'll catch you on the next one. Here's the Summit difference. We offer an industry-high 80-20 split with absolutely zero fees, a low $10,000 cap, and a free listing video including drone for every single home that Summit Properties Northwest lists. For more information, click on the first link in the description of this video.